Hello, everyone. Welcome back to Navellier Market Buzz, episode 7. I'm Crystal Navellier, and I'm joined again this week with my father, Louis Navellier, and we have a special guest, Yvonne Marchev, who is the investment strategist at Navellier. Welcome, Yvonne. Where are you located today?
I'm in Milburn, New Jersey, right outside of New York City, and you're gonna have to excuse my dog because she's barking.
That's okay. Dad, where are you?
I'm at your grandma's house in Solano Beach, California.
Very good, very good. Well, let's jump in. I would love to talk about the Tesla Robotaxi event that happened last week.
Yeah, I'm actually working on an article on that for MarketWatch. I thought it was an incredibly well choreographed event. It was at Universal Studios in Burbank, and Elon got in the Robotaxi and went around a building, popped back up. They also introduced a robo-van, which was very futuristic, can hold 20 plus people and or carry cargo. And then he also had his Optimus robot serving drinks. The Optimus robot can do some household chores, including walking the dog. I think the Optimus robot's at least 10 years out. I think the main thing is robotaxis are supposed to be introduced in late 2026 or 2027. They'll be tested in San Francisco and Austin, Texas. They're behind Waymo, which is Google's product. I've been in San Francisco a bit in recent weeks, and the Waymos are everywhere. What happens with the Waymo when it gets a little lost? A human intervenes and takes control, and hopefully Tesla will have something similar. What's interesting is Waymo uses LiDAR, which senses heat from animals or pedestrians. A lot of cars with the night vision have LiDAR built in their cars. The Tesla system only uses cameras, so it's going to be interesting which system works the best. And but I think it's imperative that Elon gets these robo taxis out there because seeing is believing, and he does get some criticism because he likes to introduce things and they don't materialize right away, kind of like a sports car, and so it's I think he needs to test these things as soon as possible. But I thought it was very well prepared event, and unfortunately, the stock sold off because no one figured out how to monetize this right away. But long term, I think they're on the right track.
Now, do you want to talk about the JP Morgan quarter announcement?
That was great. Beat on everything. They got it higher, and Jamie Dimon wasn't manically depressed. Jamie Dimon is probably more powerful than the Fed chairman. And this is the best run bank in America. And if he's happy, we should be happy. Okay. So I think that set a very good tone. Obviously, falling rates are going to help all the banks. If you read the bank earnings will be coming out this week, they expect falling rates are going to help Schwab probably the most. So we should get more good bank earnings. And as far as what we call the delinquency rates, they're still there. And some banks may have to boost their loan loss reserves, like Citibank, but we'll see.
Yvonne, I see you thinking. Do you have any comment on it?
So I do think the glass is half full. Like the only fly in the ointment is Warren Buffett raising cash like the world is ending. I think he sold a third or a quarter of his Bank of America stake, which was humongous. He sold a lot of Apple. I think his cash position is well above $200 billion. I haven't seen the last filing, but he's raising cash very, very aggressively as the market is making all-time highs. Now, the market's not cheap, but nobody cares how expensive the market is in the last 3 months of the year. And so far, there is no sign of a recession, and I do think we'll have a probably pretty decent finish to the year if we don't have something crazy going on the geopolitical front, which is you can't really forecast ahead of time. It's not an economic indicator who's going to blow up which missile where, we don't know. But, this Israeli-Iran situation, people are assuming it's going to be just an exchange of blows. If it turns out to be a protracted tit-for-tat shooting of missiles, it's hard to kind of forecast where things go because it might go regional. And, we're just waiting to see how it plays out.
That's a perfect segue. I wanted to ask you about what the British Prime Minister Boris Johnson commented about Russia not invading Ukraine.
Well, I don't think the Ukrainians can win this war simply because they're outnumbered and outgunned. Now, you can throw all kinds of weapons at them, and if they don't have the manpower and if they're stretched too thinly, which they are, I mean, how are they going to win? What, they're going to just keep invading Russia without people? Um, so what the Russians are doing is like a classic Russian strategy. They don't care about human losses, unfortunately. That's how they are. And they're basically bleeding Ukraine dry. That's what it looks like to me from the sidelines. So I don't believe Ukraine can push any type of front line back to where the borders were before the war. So there's going to be some sort of a negotiated settlement. Otherwise, Putin can keep doing what he's doing. We can keep throwing money at Ukraine, and you're going to have another year of the same stalemate. By the way, the Russians are making progress. So whoever gets into the White House in November better figure out some sort of a diplomatic solution, because I don't think this is going to go anywhere the way it is at present. And the only other way you can tip the scales, if you send in troops from other countries, and that means World War III. I don't think anybody wants that.
Yeah, I
So
should add that, Boris Johnson's on a book tour, which is kind of revisionist history. And uh, Zelensky ran on doing a peace deal with Russia, but Boris Johnson talked him out of it,
yes,
as did the US. And so we're kind of responsible for what happened, rightly or wrongly. But the most controversial thing he said in the book is that Russia wouldn't have invaded if Trump was president. And he's doing that to get hits for his book. Whether that's true or not, I don't know. But Zavon has pointed out that the war is just a mess. You got a million people injured and or maimed, and when you lose 40% of your population as Ukraine can, you can't restore your country. Your infrastructure is obviously harmed, and you just can't grow your economy very effectively when you lose 40% of your population. So this is a mess, and hopefully there'll be a peace agreement. But it's a big distraction. It's amazing how it's not in the news anymore.
so I mean, I don't think Putin is a good guy, but what you need to realize is the Russians view Ukraine as part of their sphere of influence. So it's almost like, let's say China shows up to Mexico and pulls Mexico in a Chinese military alliance. I don't think the United States is going to like that at all. So the same thing happens with Ukraine and NATO. You show up at Ukraine, you want to fold Ukraine into NATO, and the Russians find that unacceptable. And also, there was something called an Orange Revolution before the Russians took Crimea. The Russians view that as a coup d'etat. They don't believe it's a revolution. They think it was organized from somebody. There is a very interesting film by Oliver Stone, which is a very controversial director. It's available on YouTube. It's called Ukraine on Fire. It's a documentary. If you watch that documentary, you'll see that the actual events, the way they unfolded, it's factual. There's all kinds of evidence there. Is not what people say, officially say it happened in back in 2014 during the Orange Revolution. So the Russians view this as an encroachment on their sphere of influence, and they may be vilified and whatnot, but I don't think they're going to let it go. I don't believe there's a way to push the Russians out of Ukraine. Not
Yeah,
not
and
militarily.
I should add, Russia, I guess, hit some Ukrainian grain ships last week, which well, that was a new one because I guess there had been some sort of agreement not to hit the ships, but whatever agreement they had might have expired because they started to hit the grain ships. So they're trying to hurt Ukraine economically.
Now, I think that's a response for the Ukrainian incursion into Russia.
Well, I'd love to transition over into kind of what we can expect this week. In terms of retail sales, do you expect them to improve?
I do. because we had that very strong ISM services report. Retail sales are going to be interesting because your gas prices have dropped. So you want to see the savings in gas get spent somewhere else. So the overall number may not be that impressive because your sales at gas stations are going to be down. But the question is, where did the spending go, and how many categories uh, were up? Now I expect online sales to be very good. There's incredibly strong at Costco, so I'm sure they're strong everywhere else, including Amazon. So, but we should see a positive retail sales report, but the overall number won't be that impressive because again, falling gas prices.
Now, what about for the housing starts?
Well, they should pick up because mortgage rates are coming down. And we had a surge in building permits and things a while back. The home builders that build multifamily units, they have to discount a lot. Single family homes are a lot stronger. A lot of the housing starts having multifamily, so the housing market's still mixed. But our pick in the housing sector is Toll Brothers. They're more expensive homes, and they're not as sensitive to the gyrations of the economy.
That's a perfect segue. One of our subscribers actually asked how they didn't expect mortgages to spike. They want to know how the future housing market is looking.
It's going to be okay because building permits surge, housing starts surge. So there's a lot of planning in the works. Spike in mortgage rates is almost 50 basis points in the last month because bond yields have risen. So this is a little disturbing. I would tell people if you want to refinance, just go ahead and refinance. You can refinance later if you want. Depends on how many points and stuff you have to play. Hopefully you can do it without points. It's a sector of the economy that should improve the fastest as rates come down and the Fed continues to cut.
So there's something with housing that a lot of like people that have watched the market in the last 30 years, um, non-professionals don't appreciate. There is a structural shortage of houses on the market, which is a direct consequences of what happened with the housing bubble back in 2007, 2008. They underbuilt houses below the normal household creation rate. So now there's a shortage of anywhere between 3 and 5 million homes because country is bigger, there's more people living, and there aren't enough houses. So what happened in this spike in mortgage rates, which I don't believe it's ever happened before, we had mortgage rates rise and house prices rise at the same time. That's never happened before. So the fact that mortgage rates are off their highs, it doesn't, only means probably housing prices will go higher in fits and starts. So this structural issue in the housing market is not going to change today, tomorrow, might change in 5 years with the right policies, but this problem in housing will persist. So I don't see the housing market going lower anytime soon if there's a shortage between 3 and 5 million homes on the market.
We also had another question from one of our subscribers wanting to know about the high flying stock ALR.
Yeah, this was a stock I recommended early in the year, and it did go up 500%, and then it gave back almost 80% of that gain. ALR is a cybersecurity firm based in Israel. They announced their latest quarter results. They earned 41 cents a share. Unfortunately, the analysts said their operating earnings were down 10 cents a share. So this gets confusing when companies announce you have your overall results and then you have your operating results. And because of that confusion, the stock got hit. I'm going to hold the stock through another quarterly announcement season because I expect its sales and earnings to continue to grow. But there seems to be some operating earnings confusion on ALAR. And you got to realize that every company in Israel is, they've lost some of their employees, their IDF reserves. They have to go help defend their country. But Israel's always been the leader of cybersecurity, so I'm expecting ALAR to continue to be a leader.
Well, with that being said, what do you both expect for the quarter three earning announcements?
Well, they're supposed to be at 4.8%, but that's down from the previous quarter. But I think they'll be a lot better, and the banks are already going to start lifting that number. And what our testing showed is you got to be in the top 55% of stocks with the best fundamentals. Otherwise, you're performance drops off the cliff. Based on analyst estimates, it looks awfully good. As Yvonne was mentioning, we should have a nice year in rally because this is a seasonally strong time of year. The second half of October is much stronger than the first half, and October is a seasonally strong month despite October 87. So if last 30 plus years, October is strong. The November is also seasonally strong. It's a happy time of year. People get in a holiday mood. That happiness seems to rub off on the stock market. And then finally, we often get an early January effect, and the small caps catch up. So we're expecting a stunning earnings announcement season as always. It's going to be every stock for themselves. I think the test was when Supermicro announced that they had better than expected sales, and that stock shot up, and so that was a good sign, and what we have to look forward to.
So negative seasonality did not work out this year. So the same way there's positive seasonality, there's negative seasonality, and the worst month of the year with better than 1% negative return is September, and September was up this year. And I think that was the first time in 5 years September is up. So if negative seasonality is positive, it may mean that positive seasonality is even more positive. That's what it looks like. I think it's entirely possible we end up having a 30% a year up year in the S&P because we're up already 20% for the year. It's very uneven. Those 20% don't mean the average stock is up 20% because up until July, the vast majority of gains were in the top 10 or 20 stocks in the S&P 500. But that has started to change. The market's kind of broadening out. So I think we'll have a strong finish to the year. The only thing that I can predict is obviously geopolitics, and I'm hoping that's going to stay contained, in the next 2 or 3 months.
I would add that M2 has had a surge here, and the stock market usually does follow M2. So M2 is the money supply, it's basically the money in your bank account, and short-term savings accounts. That any CD over a year gets excluded from M2. But the surge in M2 is highly correlated to the improvement in the stock market, so that bodes very well. And hopefully this election uncertainty will dissipate right after the election. Hopefully the election won't be contested, and then we can just adapt and go on.
Yvonne, I'd like to ask you why you call Citadel's algorithm Skynet.
So it's not only Citadel that runs those algorithms. The largest proprietary trading desk on Wall Street is run by Goldman Sachs. Trading patterns of the stock market intraday have changed over time. And there's a lot of flipping, and I suspect, I have no way to prove it, that's directly correlated with the huge volumes in the options market. The game of options that expire every day is options expiration now, is shorting options, and the only way that can be done profitable is with algorithms. So I think there is like a feedback loop between the options market and the futures market that creates a very nasty flipping pattern throughout the day that just the only way it can be capitalized on is with computers or by individual traders if they expect to see what it is that they're saying. The overall market, there's studies that have been done. A huge part of the moves over time are made overnight, not during the day. So it was, I think, Bespoke that did this study. If you bought and sold at the close, or if you bought at the close and sold at the open, you actually had a lot higher returns than if you actually traded intraday. So it's almost like the long-term moves are done overnight, over time, and then intraday the market flips just so they can do the options arbitrage. It's a pretty there's a book called Flash Boys by Michael Lewis. It came out in 2015. And basically he says computers have taken over and people are just being led by the nose by software programs. There's a company that in order to shave 3 milliseconds between Chicago and New York, in order to arbitrage between futures and the cash market, actually dug up some farm fields and buried a shorter fiber optic cable so they can have a speed advantage between the two exchanges. That's how much money is at stake. And that's not really done by people, that's done by computers. And it's getting worse and worse and worse by the day. It's I don't know where it's going, but I kind of liked it more when people were running the show, not computers.
I would add that the reason that Ken Griffith is so rich is I think he perfected a perpetual motion machine. The options market is the equivalent of a dog chasing its tail. Once it starts chasing its tail, it can't stop. And 43% of options issued are daily. And when you write an option, you collect a premium. So it appears that Citadel and some of the other algorithmic traders are very, very busy selling options and collecting these premiums, but they of course don't want to pay the premiums. So as if the stocks get close to the option expiration price, then of course they have to invent some mean reversion program to bring the stock down so they don't have to pay. So there's a lot of games that go on during market hours. Yvonne is absolutely right about um, uh, that the best picture of the market occurs after market. So we buy research from Bespoke, and Bespoke has proven, and they issue these charts every now and then based on SPY and QQQ, that if you bought those very popular ETFs at the opening and you sold them at the close, you lose money since their inception in the last 40 years. On the other hand, you buy them at the close and sell them at the opening, you're up a couple thousand plus percent. So market hours is what we call a killing field. Okay. And there's a lot of things that are going on, and there's a lot of games and gimmicks. Uh, when we sold our broker dealer business back in 2013, one of our incentives is just to get out of bad trading pipes, because some of these firms would not allow us, for lack of a better word, best execution. There was one firm, Bain Capital just bought them, that big public company that would only let us trade at 10:30 Eastern, 1:30 Eastern, market only. We could not work an order. And so what happened with our private client group is we sold we cut off our broker dealer ties and just consolidated all our business at Schwab because we like Schwab's execution and how they let us work orders and things. But there's a lot of games that go on during market hours. And when we do sell, we like to sell in the strength. When we buy, we like to buy in dips. And that's because we're trying to move the opposite of what Citadel's doing.
Perfect. Well, I'd love to finish off asking you, what are your favorite near-term stocks right now?
Well, the insurance companies obviously survived Hurricane Milton. Allstate and Progressive, which are homeowners auto insurance companies, were down sharply a week ago Monday, and then they went up every day thereafter. The main reason is Hurricane Milton uh, was losing strength as it approached Florida. It hit a cold front, and obviously it did a lot of damage, but nowhere near as bad as initially feared. And the other insurance company, other than ALL and PGR, that rebounded most dramatically was HCI Group. That is a homeowners insurance company in Florida that we own, and it was up sharply Friday. My best buy near term is Powell Corporation. This is what we call a fundamental A stock. This stock ranks in the top 20% of sales, margin expansion, earnings stability, earnings momentum, cash flow, return equity, ounce earnings revisions, earnings surprises. It is a small cap stock, so it tends to move a little bunny-like, sit hop. But it was sitting on Friday, it didn't go up, and it's a very good near-term buy. That's POWL.
The big laggard in the stock market has been the small cap index, Russell 2000. And that's the index of companies that benefits the most from Federal Reserve rate cuts. So if we get more rate cuts, which, some people say we should, other people say we shouldn't. That depends on how inflation plays out. If we do get more Fed rate cuts, I think it's entirely possible that the small cap index does exactly what it did last year, this time, which basically outperformed dramatically. It's very hard, I can answer that, very hard to pick small cap stocks because they're not correlated to the index as much as large cap stocks are, to large cap indices. They kind of do their own thing. But as far as a macro call, I think we should see outperformance in the Russell 2000 index, which is also tradable through all kinds of ETFs and whatnot.
Perfect. Well, thank you both for answering all my questions. And Yvonne, thank you so much for being here today. Again, please like and subscribe. And if you have any questions to ask us next week, leave them in the comments. But for now, thank you so much, and we'll see you next week.